rich man and I have been a poor man, and I choose rich every fucking time.
Hi guys, welcome to this week's video. I hope you all enjoying your weekend. We have a pretty interesting and pretty big week coming up this following week, and we did have the Fed minutes. We also had a short week. We didn't have, for Thanksgiving, market was closed on Thursday, and then yesterday was a half day. So let's dig into what we have coming up and what I am looking at and what tickers to keep an eye on. Okay, so we have Monday, we have Bullard talking again. As you know, can make the market move. So keep this in mind. This is a noon Eastern time. So if you are in a trade, make sure that you're paying attention to it. But we do have is the consumer confidence index comes out on Tuesday. And then the main that you want to pay attention to is you got the, you want to pay attention to all of them. But here you have the ADP employment report coming out, and jobs opening, Chicago PMI, and we have Powell talking on Wednesday. And this is the, the urgent meeting or whatever you want to call it that was booked for Wednesday, November the 30th. It's at 1:30 Eastern time. So we're going to have to listen to carefully what he has to say. If you read the Fed minutes that were, they had some very important information in there. You would say, oh, the market didn't react negatively, market react positively. However, if you go into the Fed minutes and you read through it, Feds have not gone off from their script, what they've been saying about, bringing the inflation down. However, there was more of wording this time, even for risk for recession and, they're trying to build the economy back up, and interest rates being still being raised up. There was no indication in the Fed minutes that things are going to be cooling down, and Feds are happy with where we are. If you did not, you can go on to their website and read through it. It was pretty clear that they're still on track. What they do tend to, what their goal is, and to reach that, they need the financial conditions to be tightened. So right now, it's not where they want stuff to be at. The market has to pull back. We need to see that, and the 10-year and the 2-year has to rise up. And I'll show you guys how some of the things you can also look at it where Fed fund futures are and how they are trading, and that can also give you an early indicator if what track the Feds are on, even though, market could be taking some of these news as positive, and we are seeing these run-ups. Again, the bear market run-ups are the hardest to, go through when you look at your charts and you still see a lot of stuff being bearish. However, I'll go through the charts and show you guys what I'm seeing and what I'm talking about it. And then on Thursday this is the number that matters for the Feds, because this is what they are calculating their inflation data from. It is the PCE number. So that's what we want to pay attention to it. If it comes high or low, where is that core PCE number or PCE year over year number is coming up to it. And then we have the manufacturer index numbers coming up, and we have the motor vehicle sales, non-payroll numbers on Friday. Then unemployment rate is coming also on Friday. And also, it doesn't mention here, but we do also have government auctions happening this week as well. So pretty heavy week, I would say. But then the other thing is we also know that new money starts to pour in at the beginning of the month as well. So we'll see how, market starts to react to that. Do we continue to see that push up in SPX and SPY. Do we see that 4,020 or 420 on SPY? Because there's been phantom prints up to 424. We also have phantom prints are down to 320. So it's interesting to see, it will be interesting to see where market goes and what market does on Wednesday. If we look at the reserve repo as well, so here it comes. And if you look at it last week of the month, it usually tends to be pretty high. So here we are for September 29th and 30th. You can see the bars are pretty high. We're at 2.3 trillion, 2.4. And then the same thing kind of happens at the end of October. The reserve repo starts to rise up again. So we'll see what happens for the week of November if we start to see this rise up as well. Once the numbers are rising up, we normally see the equity market pull back as well. And then the other interesting thing is this is all free information. You don't need to pay anybody. Yahoo Finance, if you were to, and you wanted to see where the most of the open interest is on call inputs. Just pull up Yahoo Finance. You can type up the ticker. So I have this SPY up here for January 2023. The one thing that you want to pay attention to is the open interest and volume. So if I were to go to look close to, always look for close to the money, what is happening. So our open interest and volume is pretty strong right here at 394 and the 400 strike price. So so for you, I would say for SPY on the call side, we can see this is already in the money, right? So this was the call side. If you were to pull it up, this is what you would see. So right now we are seeing for the coming, what is not in the money, you got quite a bit at the 410 strike price. You got nice open interest and volume. And then if we look at the puts, and this is where the puts start. So 410 is where most of the open interest is for call and volume is. And for puts, we can see that we are seeing the 396 and 393. Those are two areas where you have the strongest put open interest and volume. So you can use these levels to your advantage as a support and resistance. For the put, you would use that as a support. For the call, you would use that as a resistance. So the other thing is, if you want to go closer to them, to the date where we are, so I would look up at December 16th. So December 16th, again, if you look at it, we're already in the money. 402 had the the nice open interest and volume here. And look at this, 410 is for January 16th, but we have a nice open interest and volume at 413. This could be people being out of the money. You can see you even have a bigger open interest and call volume at the 420 strike price. Then if you were to look a little bit closer to the money, 405 also has the decent amount of open interest and volume. So now let's look at on the put side. On the put side, we have we're looking at 395. So this is kind of you had it on January was 393. Here you have 395, and then you have 377. So this is a big gap. So I would say a lot of people are way out of the money right here. But this becomes your support area, 395, and where 410 and I would say 413 area is where your resistance also becomes on the call side of it. So always check. This is all free information. You don't need to pay anywhere. It just, Yahoo Finance gets updated, I would say about an hour after the market is closed. Sometimes you might not see during the daytime making much of the change, but at the end of the day, you can always come back and check your open interest for any ticker. All you do is just type up the ticker right here. You can say options lookup, search, and then you can change your dates according to whatever expiration date is available for that ticker. All right, so let's look at what we have. So as I was saying that the future funds, Fed future funds are, this is their, which ones are? So these are the June contracts right now. So they're currently trading at 5.005 right now. So if we were to look at our 2-year, 2-year is pretty behind. So this needs to move up. If the Fed future funds are trading at 5% area, you will see your 2-year and 10-year start to rise up, because that means if the 2-year and 10-year is low, this has some room to catch up on it. So if the 10-year and the 2-year starts to move up, that's negative for the stock market. So I'm not saying that I'm only bearish. I'm just showing you guys what are the things to look at, what are the things to pay attention to it. I play the price action. I play what I see on the charts. I am not just bearish. I'm, it's when you look at the long overall, the bigger picture, that's where we are. So if, they know something. If the Fed future funds for June are trading at 5% and your 2-year and 10-year is still behind, it has a room to catch up to it. So pay attention to that. I'm just sharing what I'm seeing on the charts. So 2-year is behind, and then look at the 10-year. So both of these have room to move up, and this looks like a bull flag on the 10-year as well. So if we were to pull back a little bit more and then bounce from it, I think this is setting up for a pretty nice move up here. A lot of the people are saying SPY's coming to 420, SPY's going to 470. I will be the first one to admit that I was wrong, but it is hard to see where the financial conditions are, how how everything is, and it doesn't line up with when you hear things like, oh, we're going to back to the 500, we're going to 470. Yeah, we know that historically October, November have been positive months, which we are seeing. So anytime we say you want to learn your charts, you want to look to the left. So if we look to the left, we know that market is usually in the positive when it comes to close to the Christmas rally. But do I think that we're headed toward to the 470, 500? I don't think so. I don't see it. I could be completely wrong, but I do see these bounces. I do see that we have a room for SPY to go up to 408, 410, 413, 420. Yes, that is achievable. We've seen those run-ups in August, so we've seen it before as well. So it is definitely more room for SPY to move up. However, this Wednesday's meeting, whatever Powell says, this could be, we could be setting up for another Jackson Hole. And if you pull up your Jackson Hole chart from that day, you can see the kind of pullback we got. So just remember, look at the overall bigger picture. That's what you want to understand, especially if you are, I'm like, what, 2.5 years into the market, and a lot of things these are interesting, amazing, that eye-opening, the things that you learn. The more you spend time, the more you read, the more you look into the history, the more you can see where we are and where we are headed toward to it. So don't just go with we're out of the bear market. You know what? You might get stuck at even deeper discount. Who has ever said that, the final 50% off is the final 50% off? That 50 could become 80, and that 80 could easily become 90%. And we've seen some of the companies are not even 80. Some of them are close to 95% off on sale right now. It's hard to see how they're going to survive. So, and definitely look at a lot of the bigger picture before you, make a decision. Watch the price action, watch your chart, look to the left, and see. You'll always find something. Something will tell you what the history is going to look like, what we are about to see. All right, so let's look at US 500. Looks like this one is pretty close to the 200 moving average. Not really a rejection, but pretty close to it. So we are sitting at that 62% fib level as well. We do have a supply coming up as well. So we'll see what the market wants to do. If we are headed to the 4,040, 4,080 area, which is also your supply zone, and then pull back, definitely something to watch on it. And then I just like to look at all of the charts because every one of the price action can tell you something. And then futures, the same thing. We got slight room in here as well. Do we push through it and then try to test the same thing, 4,080 or 4,090 or even 4,100? Who knows if the price really wants to push through until Wednesday. So we could see that as well. So let's look at SPX. Again, this broadening wedge pattern is still intact. We do have a supply coming up. And if we saw US 500 and futures that are pretty close to the 200 moving average, SPX still has a little bit more room to go. So we could still see, 4,040, 4,050 on SPX as well. However, if we do start to lose, 4,000 is the biggest gamma level as well. So that's what you want to pay attention to, is the 4,000. And then this is the trend line that everybody has been watching, and you want to see how we react to that. I did pull up, oh, this is pretty cool. A friend of mine, sent this, and I was just talking, I was like, it's kind of hard. I know we are in the bearish market, like, what do I want to cover in this week's video? And he's, he pointed out, he said, a lot of people, a lot of us actually, we do struggle with when it comes to risk management. These are the 5 things, possible outcomes of your trade. You could break even, small wins, small losses, big win, big loss. So if you eliminate the number 5, you are good. You'll be winning. Your account will start to move up. It's this number 5. The big loss is what you want to not have it. Take it at break even. Take it small wins. You all know how I, take 5%, 6%, 10%, 15%. And my runners pay me. And I've said it over and over and over. I'm not greedy when it comes to taking percentage. I don't care. I always remember the banks don't even give you 2%. Doesn't give you 5%. So if you are getting 5-6% and you were holding the trade, let's say overnight, or you held it for 3 days and you're at 5%, take that damn 5% and run. And don't have a FOMO that it ended up doing this and that. That 5% is going to add up. And even sometimes if the trade goes against you, and taking that break even is totally fine. That is okay. At least you didn't give the market any money. So remember that. It just happened to be on my chart. So, all right. So here, 4-hour SPX actually could be setting up for a nice head and shoulder as well. I will show you guys my other chart as well, with the I like to keep things separate. If I'm seeing something on the smaller time frame, I'll keep that chart separate from my regular charts that I, thoroughly go through it, have my supply and demand, all that kind of stuff. So this on the 4-hour could be setting up for a nice head and shoulder on the SPX. But again, this could be invalidated if we do start to move higher and we are breaking above 40.50 or 40.80, any of that levels we are breaking out. So this will get invalidated. So something to watch as well. All right, here is the SPX chart, and as you can see, the SPY is coming up as well. So SPY is at 402. I would say, again, this one has a little bit room to touch the 200 moving average. We could continue to move up here or touch this trend line as well. So 407, 410, I would say still on the table. I'm not saying that it is done running or it's gonna start dropping. I think if this is, nobody can tell you that. We just have to wait and watch to see what the price action does. We do know that it has a room to move up. We also know that 403 has been a pretty strong resistance for it. So if you look at your 1-hour chart, look at this, how hard of time it had to break above the 403, how many times we rejected and then we came down. So something to watch. The other thing is I want to go over is the VIX and the VVI. VIX, here, let me pull up my RSI. So Let's go to the daily. This RSI, I have two lines at the bottom right here. This is back in 2004. This is the lowest we've been in since 2004. So RSI is this low. And then the next time we were low, the RSI was this low, was back in 1991. So all you have to do is just, bring your chart in here and you'll see what I'm talking about. All right. You got a touch right here. This was December 2004. We actually had this bottom line touch again in April 03. And then we had, I believe 1991 is when we broke through it. We had one touch right here back in 1998. This is the one that I'm talking about right here. 1991 is where we broke below as well. So RSI is pretty low. It is, does it mean it has a room to go down? Yes, as you know that there is this second support coming up as well, which it was able to go down to that back in 1991. So something to watch to see how these two lines react. We are already pointing upwards, but we'll see what Monday brings. And then the VVIX, so this is the volatility index for your VIX. And we can see that RSI is trying to turn around, but we're still below the 50 mark. So we want to see how we react here. A lot of people, you could see this candle as being a gravestone doji as well. So which means there is still more room for VIX to come down as well. So do pay attention to both of these things together, how VVIX is doing and where VIX is. And then the other thing is skew is starting to see let's go to the weekly. So this is where you can see where they are starting to build their positions for hedges. So last time this happened was back when we saw that move in, I want to see in August is right here. Right here, back in August and September is where we saw that move and we saw that market pullback. So right here is we are starting to see that skew is also starting to change. So pay attention to it. If we do get above the 200 moving average, that means they are building their hedge positions. So basically, the people who have a lot of shares and they're starting to buy these options, whether they're buying out of the money call or out of the money puts, this is where you'll be able to see how skew is moving. Are we moving up? Are we moving down? So something to watch. This was actually a beautiful setup for it to move back up. Looks like a lot of money is coming into it. So watch that. So one thing I wanted to cover this week is Dow Jones. This has been very, very strong. And if you know, the companies that in Dow Jones have been really strong, and it is coming up to that they are popping off. So this could be the one thing that we will start to see these companies start to pull back. Believe it or not, I said on the live trading that Tesla's gonna move back up, and we've seen that Tesla's been running the last 2 days. And I think Tesla still has a little bit more room to go. I saw some bullish divergence on the RSI and MACD. However, a lot of the tickers that are in Dow Jones are having bearish RSI divergence starting to build up. A lot of the bearish MACD divergence are starting to build up. So I'll go through a few of the tickers, but this is looking pretty heavy right here as well. We do have, doesn't mean it's going to come down on Monday. I'm not saying that. Just watch how the price action reacts to in this area, the 35,000. This is the zone that you want to watch how we react to it. 35,000 right here or 34,800. So those are the two levels that you want to watch to see how supply reacts to it. And then the tickers that in this one is CAT, look at that, pretty heavy. Secondary test of the supply right here is looking beautiful. If we were to, I would love for it to come back and retest again the 240 zone. That would be a beautiful entry for some long dated puts. And we are starting to bake that bearish divergence on the RSI as well. So, and on the CAT, I want to show you guys the 4-hour chart as well. Look at this box right here. What a nice consolidation. This reminds me of Amazon before the split. For a year, Amazon was in this this box, like this kind of distribution phase is what you want to call it, is where it was kind of going up like from one to the top of this box right here. So watching this thing also make a double top right here. That it did break out a little bit before, but want to see how rest of the market does and how this reacts to along with the Dow Jones if it starts to pull back. These are the tickers that you want to pay attention to. It is the next one is BA. I think BA has been a leading indicator for the market. This run up, it's been running very nicely from back in October, and we are starting to make double tops right here. Do I think it has room? Yes, I still think it might has a little bit more room to get above to 184, 185. However, if it loses below 174 right here, 0.01, a lot more room to the downside on Boeing as well. And again, Honeywell is another one that is a big name in Dow Jones. Again, beautiful retest of the supply right here. Would love a pullback and then a retest. That entry would be very nice as well. We did take a trade on Wednesday on Honeywell, actually during our live trading. My put was green literally for a second on Friday morning, and I could not get out of it fast enough. And then it moved for about $1. So I'm currently down about 6% on my contracts, but I'm not worried this, and I have time on it. So I'm looking for that pullback and then pull back up. If it does have that second pullback up, I will definitely load up puts for something out to June or September. Who else is in here? Mark. Look, pretty topped off. Actually, this one is making all-time highs right now. So 110 is measured move. If it could get above it, your RSI is pretty high. We did have that bearish divergence. Then we had that pullback and we're setting up again. So I would definitely be paying attention to how it does it. I'm already out of that position, but I think I have another one on it. I believe bot called out. I have to check, but I definitely have. I think I have an open position in this one. The next one is Coca-Cola. And look at that, above the 200 moving average. You got a nice in the supply as well, kind of losing momentum. Your candles are pretty weak. However, if it does have a push through, does have a room up to 65, 66. This one actually called out a call back in September, I believe. Yeah, sometime in September it called out a call, and since then it has moved almost over $10. My runners on this thing is, I think, are up 50 or 60% right now, and I'm still holding them. So I'll probably be closing some of them this week and seeing how this plays out as well. Next one is JP Morgan, is also pretty heavy in Dow Jones. And you can see we broke out beautifully from 200 moving average right up here. It does have a little bit more room if it wanted to. With the rest of the market, we did have a breakup structure right here. So we'll see what kind of candles we form for this next week. Otherwise, the pullback on this one is you're looking somewhere in the 110, 108 area on JP Morgan. Walmart, Visa, and obviously Microsoft and Apple, those two are also pretty big in it. So Walmart, nice gap fill in this thing. And we are in the 153. It definitely could retest this supply zone and reject off here. Longer dated puts definitely would be a nice entry for it. But again, your RSI is pretty overbought right now, so it could pull back as well. So another one is been running very nicely is UNH, your United Health Group. This one had already the test of this zone right here. It is kind of losing momentum, does have a gap below as well. However, the RSI is still looking pretty bullish. We are above the 50 level. So I would say easily 550, 555 is doable. And this thing has been kind of opposite of the market is some days where market is running and this was pulling back, or market is pulling back hard and UNH is running up. So keep an eye on that one. Microsoft, I saw a lot of calls come in at the 250 level on Microsoft. So does it mean it has a room to 254? Sure. And it has a lot of dark blueprints at 254. So this might be this resistance for it. But for me, Microsoft below 245 long dated puts should be golden on Microsoft. Apple, not so much of a good news is coming out of China. A lot of the factories are shutting down again due to COVID. And they've been getting quite a bit of a negative press, especially for those factories out of China. For Apple have been shut down and people have been leaving, and Apple does look pretty bearish here. It looked pretty bullish a few days ago on the weekly, and then that changed pretty quickly. So definitely I'll be watching 152 on Apple. If we don't make it to 152, 154 zone, definitely gonna be looking to add more onto my position. I am holding pretty out of the money 2024 puts on Apple, and they've never gone in red actually, even with this RAM up, but they're still in the green. And we also had a bot call out, so that was my another kind of a confirmation for me to kind of continue to hold. Their RSI starting to point down, still at 50, so still could have a room to go up back to $3. All right, let's see, what else did I have here? HD. This is another one in Dow Jones. It has a little bit more room. You have this trend line, it's already touching it, could pull back as well. So let's look at the weekly quickly. Yeah, looks like slight more room to touch that trend line. I'm just gonna delete this. It's no longer valid. We've already broken above. So definitely making a really nice W2. So however, looking at where Dow Jones is, I think this one is coming up coming up close to being pretty heavy as well. And so definitely something to watch. Just few tickers that I wanted to quickly go over that we have open positions into it. So Macy's contracts are out to 2024, double touch of the supply zone, looking beautiful. 25 is the max that I have. This would be the back test of this supply zone, but pullback would be nice. So I'm still holding these ones. The next one is AT&T. And as you can see, we are struggling to fill this gap. This is actually a really nice gap as well to the upside. So whenever you're holding longer dated puts and your swing is down when you see at the open, the easiest way to do even day trade or scalp is just go opposite of what your swing is. If your swing for long, long time, that is out to end of 2023 or 2024, they're down, just play calls, do hedging. You can recover while that puts gonna pay out. In the meantime, you can still make money on your calls as well. The next one is ON. It's the semiconductors. Beautiful rejection already. This is already looking pretty bearish as well. If we have a little bit more pushback and consolidation in the 74 to 76.50 area consolidation, and then still pulls back, looks pretty bearish. And RSI is setting nice bearish diversions as well. Mark, I went over JP Morgan. I went over Ford. Is from our live trade. Actually, this is also another one that we are holding. So I'm watching the 200 moving average of this one. So want to see how we react to the 200 moving average on it, and then we'll see what happens. Let's see, Tesla. As I said, I think it has a little bit more room. You could see that 195, 197, 200 area. That's your next supply zone. So this is a wall as well for Tesla. And as you know, orange lines are my dark pool prints, which is 183.73. So if Tesla breaks above right here, then you're looking at the 195 to 200. That area is definitely fine. All right, so that's it. That's all I have for you guys for this week. I hope you guys enjoy the video. Again, don't forget to like and subscribe. Thank you so much. I will see you guys next week.